Hey, what's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Hey, if you're new to the page, hit the like, subscribe, and the notification bell. Listen, I want to talk a little bit this morning, or should I say this afternoon. I'm going to post this one early on Friday. It really doesn't matter what the market is going to do today. I just want to show you guys some things on how to just make long-term money, right? I just want to address a few things, okay? Let's get right into it. Let's talk about Apple really quick. So Apple is turning into a service-driven company, okay? You can't just look at iPhone sales. You got to look at how the company is chopped up and how they earn their revenue, okay? For those of you that don't know, I am Larry Jones. This is Stock Up with Larry Jones. Listen. Hit the like, subscribe, notification bell. Make sure you hit all, okay? China has been a problem with slowing sales because of their own phone company called Huawei, okay? And they're a direct competition. And of course, China actually put restrictions on companies like Tesla and Apple that does a lot of business over there in China, okay? But it looks like it's demand. They're saying that they're having a problem with keeping up with demand on the new iPhones, but that would be rectified within this quarter. Just like I said, the earnings it could be a beat and the stock still trades sideways. I believe the last time I looked at it, it was around 175-ish. That's not bad. Down around 2% or less than that at the time that you'll see this. It's not the end of the world. It wasn't a horrible earnings, and it wasn't a knock the ball out of the park earnings. So that's what's happening with Apple. Okay. Let's see here. Yeah. It was trading around 175. So that's what's going on with Apple. But for those of you that swing trading it, I understand. But for long-term investors, I bought some, I believe it was at 162-ish, or I showed it yesterday. And I'm going to continue to add to my positions just a little bit because I personally think that we're going to end the year higher. That's what I think. And then we have, let me just skip around here. Then we have good job numbers, actually good job news, bad job numbers. Let me explain. So the jobs report came in today, this morning, and it showed that job creation has slowed greatly. Now, if you're new, you're saying that's bad news. But for those of us that know how the Fed operates, that's actually good news. Because if a job creation keep rising and more people have jobs, then more people have money, more people will spend money, causing inflation to yet go up. I personally, at this point, and this is not a fact, this is what I think, I personally think the Fed is through this year. This job number, of course, it was from October. The data comes out a month later, is proving that inflation is cooling, okay? But this is one of the things that causes inflation, which is job creation, all right? So interest rates, because of this, listen to this. Interest rates are at a 22-year high, all right? There's something I want to talk about at the end of this video with some of my positions, so please stay tuned. But I want you to get the overall picture. Interest rates are at a 22-year high. The average credit card rate now is 20.7%. 20.7%. You're paying that on your credit cards. Now, just put a note right there because I'm going to come back to that. The average car loan is 7.66%. Okay. 7.66% average car loan. The average mortgage is 7.76%. I refied my mortgage right after COVID, and I got 2.4. I mean, just before COVID. So just before COVID, I'm paying 2.4% on a 30-year fixed, and someone else right now, if you get a mortgage right now, you're going to pay 7.76% or thereabout. That's what higher inflation does. And because it hurts us and we have less money in our savings and we have ramping up credit card debt, we spend less. And that's what the Fed was looking out for. Now, because of all of this good news, right? So soon as this job numbers came out, what? Gold went down. The bond yield rates went down, which is good and good. The dollar went down, which is good, again, for the stock market, because when the dollar is strong, the stock market goes down. When the dollar is weak, the stock market goes up. It does the opposite. Remember that for those of you that are new. Now, let me talk about some of my investments, not trades, that I was in. My VOO was down by 3% just a few days ago. You guys know in the Webull app, I've been dollar cost averaging. I'm buying every Friday. And when it goes down, I buy more. It is now up 1.5%. Okay. My Palantir stock that you guys saw me buy earlier this week, okay, if not Friday-ish of last week. So within the last 10 days, 8 days, I would say, I bought Palantir and it is up 28% right now. I'm talking about investments, not swing trades, okay? And then my ARK. For those of you that have ARK, ticker symbol ARKK, leave me a message in the chat. Leave me a message in the chat if you've been DCAing. My ARK was down 14% last week, 14%. And now it is up 5% just today. So my ARK is up 5% just on today. And my overall position that you guys see me DCAing in is up now 1%. So all of the money that I have in ARKK is up 1%. So you're talking about a 15% jump in days, and literally in 3 days. So what's your point, Larry? My point is that if my long-term positions can jump by 15% in 1 day, and when it goes down, I continue to put more money in when it goes down, less money in when it goes up, which is what we're supposed to be doing. Remember, buy low, sell high, then it is working. And so I'm going to say this, and it doesn't get under my skin. It does get under my skin. So please don't say, Larry, don't let these people get to you. I, in my heart of heart, want you guys to make money. And someone brought to my attention, oh, there's another knucklehead out there that made a video talking about your $5 a day doesn't work. Well, it's working. It's working for me. And it's working for tens of thousands of you. And you will see on days like today that all of your hard work of buying good companies in the red pays off when we come out of a bear market, right? You will see jumps when you buy down 5, 10, 15, and 20% in days if you just keep at it. VOO, ticker symbol VOO, which is my largest position. It's just the S&P 500. And for somebody to say that that doesn't work, you're an idiot. And I'm just going to say this, and it doesn't affect me. I'm good. I'm telling you, I'm tired of misinformation get out there. Now, why would a person do that? They're pure evil. They want you to stay broke. They're trying to ramp up their little pages. And I'm telling you, if you do Warren Buffett, I'm going to come back to Warren Buffett. The stock market is a tool that transfers money from the impatient to the patient. I'm telling you, everyone that has been DCAing, and I don't care if you could only afford $5 a day. For those of you that can only afford $5 a day and you've been DCAing into good companies, blue chip companies like VOO, like VTI, you know, the overall stock market, the S&P 500, even some of the Magnificent Seven, the Teslas, the Apples, the Googles, the Microsofts, and so forth, the AMDs. I'm telling you that let's keep it real, family. That's money you would have blown shopping, $5 a day. That's money you would have blown Starbucks. And for those of you that says, hey, I've been DCAing for a year now and it's red, you've been DCAing on sale. And I'm just going to tell you that you've been DCAing on sale. I need you to commit to 5, 7, 10 years. Just keep it going. Don't stop. Don't listen to these knuckleheads that have no clue of what they're saying. They are evil. They want to keep you broke. And if you listen to them, it makes you the example of what Wall Street calls dumb money, emotional trading. I didn't make it up that investing in good companies long term will make you wealthy. I didn't make that up. The data exists. I want you guys to know that don't know that America was established 1776. It was established, not discovered. And literally 16 years later, the New York Stock Exchange was established. Okay, 1792. That's how long this is. So why would you listen to some knucklehead that's trying to ramp his page up rather than looking at the data that has proven itself since 1792, good people? I'm going to keep saying this because it is in my heart of hearts that you shall also prosper. I'm telling you this. This information is free. It's up to you to do your own due diligence. And for those of you that are just trying, you got all the risky stocks, or you just trying options and you don't know the basics of this stock market, you need to stop. If you're doing options and you don't know what a stop loss is, you need to stop right now and study. Look for all of the free stuff. Continue to watch this page. I'm going to continue to teach. I also have a link below called Stock Up View, and everyone that has taken it, I'm telling you, everyone that has taken it, thousands, literally say all the same things. I learned how to stop losing money and start making money. And this is not for pro traders. So if you're a pro trader, the class is not for you. But do yourself a favor, take the class, spend hundreds to make thousands. And if you don't want to, or you're doing so bad you can't afford that, but I'm telling you, if you can't afford that class, then there's a problem, especially if you watching me on an iPhone. You got your priorities mixed up. See, all I have for you is the truth, because I'm trying to live legacy, okay? I'm trying to leave legacy. When I travel across this country and people tell me I stop losing money and start making money when I start listening to you, that's my legacy, and that's what brings me joy. Okay, so just look at that. Look at your positions, good people. And now, I've been saying I expect it to be, even with all of the bad news, even with the geopolitical situation, I expect this year end to be up from where it is now. That's what I see, right? And the worst is behind us, because the Fed was the biggest threat. I've been saying that for the last 2 years. The Fed was the biggest threat to the stock market. It was. And then now we have earnings. And I'll tell you this, I'll end by saying this. Tesla and Apple lowering their expectations, like I said on yesterday's video, it's a setup, and let's just say it wasn't a setup. And let's just say that these stocks go down. Then I'm telling you in closing that I don't invest all of my money in DCAing, okay? And if you're investing all your money in DCAing, I'm going to tell you something that you never heard. Don't. And DCA with some of your money, but also put more money into your broker account, okay? And have it ready. Because when these good companies with revenue go down, then you need some dry powder to buy more. That's what I did with ARK, ARKK. And those are the ones that when things are clear, when the coast is clear, those are the ones that's going to jump up, okay? I'm going to leave it right there. Listen, make sure, I want you guys to check out 2 links on this one. The class is number one. Most of you guys that are listening to me need to take the class, number one. And I'm going to be adding a new chapter in that class dealing with crypto. Okay. And I also want you to check out the Moomoo app. Remember how I just told you how to just keep some money in there? They're going to start paying you interest on that money, way better than a high yield savings account. So I want you guys to check. That will be the second link below. So those are the two links that I want. And then for those of you that are buying the ticket to meet us guys in LA, you guys leave me a comment also. I'm looking forward to seeing you. I said I was going to go back to something, and I was talking about the interest rates, right? Interest rates, okay? Credit card debt, 20.72% on credit cards, 20.72% on credit card. You're paying that. For those of you that are not investing, you're paying that every month. But you won't DCA into a good company. It makes no sense. You're paying 23%, but you won't dollar cost average into a good company. It makes no sense. That is financial bondage. And then you pass that on to your kids. And then that becomes a what? Generational curse. It's time to break the curses. It's time to break the bondage, break the chains of financial bondage. Start with you so you can do a better job for your kids and your kids' kids. All right. That's what I wanted to say. I just wanted to get that off my chest, so to speak. And I will see you later. Make sure you check out the links below because you need it. OK, even if you don't, just stay tuned for the free stuff. OK, I love you guys, and we're going to keep it right there. OK, listen, I'm going to take some time off next week. I am taping some extremely important videos that I want everyone to watch. They're going to be posting. I have not taken a break since COVID, since I started this page. Okay. So I'll keep you guys posted on that. All right. Love you guys. Live, love, laugh, and learn.